from the time we bought Coinbase to the time maybe we were talking to you or whenever we measured it, Coinbase actually had done better than NVIDIA. It has come back in. NVIDIA's had another big run. But we're now really focused on the future. And so software to us is going to be a huge opportunity. Foundation models we think will deliver $15 trillion around that.
According to Friday's Labor Department data, firms gained 254,000 jobs in September. This exceeds LSG economists' projection by 100,000 jobs. In July and August, unemployment dropped to 4.1% while jobs increased. July's birth rate climbed from 89,000 to 144,000 in August, from 142,000 to 159,000 after the report. On social media, former Treasury Secretary and noted American economist Larry Summers said the jobs report showed the Fed erred in cutting interest rates by 50 basis points in September. Says, today's employment report confirms suspicions that we are in a high neutral rate environment where responsible monetary policy requires caution in rate cutting despite a mistake. The September 50 basis point reduction wasn't statistically significant. The Fed must weigh the risk of landing and the risk of hard landing because nominal wage growth is still greater than before the coup and is not slowing down, according to experts. The jobs report beat expectations for the first time since May, casting doubt on the Fed's rate cut. Market rate rise expectations fell after the jobs report. Prior to Friday's jobs report, a 50 basis point decline next month was almost 50%, over 90% forecast a 25 basis point reduction in November. Cathie Wood, founder and CEO of ARK Invest, spoke to Bloomberg TV about the Fed rate cut, jobs, and her 2025 and beyond us economic predictions. Cathie, unlike Summers, thinks the Fed is doing well because inflation is no longer a concern.
Well, we've been doing research on AI for 10 years now. That's why we were so early into NVIDIA. We've obviously taken it down in most of our portfolios out of the flagship. One of the things that we've been looking for is the next big play. We think NVIDIA is still a fine stock, but in terms of the unexpected out there, we do think it's going to be in the software layers. And as you know, Palantir has become a big position for us in the top 10. UiPath as well, it had a stumble, but it's coming back now. And I think as more and more people understand how well positioned it is, it will do very well. But a lot of the software companies that we think are going to benefit are in the private sector. And I'm thrilled that we have a venture fund that is really our purpose here is to democratize venture capital so that for $500, anyone can get access to OpenAI, which is the third largest position, or SpaceX, which is the largest position. But if you look at software, many people say, well, we have so many software companies in the public markets. What do you mean? And what we mean by that is we think that the software world is going to change fairly dramatically. And we're going to see a shift, maybe a share shift away from software as a service towards platform as a service. So think about Palantir and foundation models, and infrastructure as a service, so cloud. And the reason for that is because engineers are going to be made so much more productive, developers so much more productive by OpenAI and Anthropic and xAI and Google and Meta's Llama 3. We're going to see companies customizing their own software, for their own companies, as opposed to just going automatically to, one size fits all software as a service.
Hey, Cathie.
If you had if I had bought both Coinbase and NVIDIA and sold something else, would I have been happier about that decision? Sure, I would have been happier. Actually, from the time we bought Coinbase to the time maybe we were talking to you or whenever we measured it, Coinbase actually had done better than NVIDIA. It has come back in. NVIDIA's had another big run. But we're now really focused on the future. And so software to us is going to be a huge opportunity. Foundation models, we think, will deliver $15 trillion around that in the next 5 to 10 years in market cap. That's from a standing start.
Cathie has been sure that the Fed's rapid rate hike will lead to deflation, and she still believes this. She says that the Fed has cut interest rates too much, and now there is a chance that the whole economy will go into a time of deflation. The CEO of ARK Invest thinks that the best thing to do is for the central bank to make big cuts until inflation goes negative in 2025. Eric Bean, a partner at the Foundation Law Group and a labor lawyer, agrees with Cathie that the 50 basis point cut was good for the U.S. economy. He says that the higher cut was necessary because the job market was slowing down and more people were asking for unemployment benefits. Now that inflation is under control, we need to focus on the other part of the Fed's job and make sure we're not cutting jobs. In a Fox News interview, Bean said, "I believe that further cuts, probably more measured than a half point, are what's going to be necessary to prevent there being a significant decline in employment moving forward." Let's go back to Cathie's talk.
And we'll see what happens to NVIDIA over that time. I think...
is there something that could make you buy into NVIDIA at this point? Or add it to your flagship? I mean, I know you owe some, but yeah.
Yeah. If the price came down, again, I think I must say one of perhaps my weaknesses in a momentum market is watching a lot of momentum drive the stock and realizing that a lot of people who never owned it are getting in and might be weak holders. So, that factored into my thinking, but we enjoyed we got into NVIDIA at 40 cents based on this stock in 2014. So, wherever we got out, we were extremely happy with it's been the third largest contributor to our flagship fund. So, tactically, sure, we would have loved to still have it, at a bigger position in the portfolios. But again, we're all about the future, and our research is focusing us on this software layer that has huge amounts of appreciation.
The CME FedWatch tool shows that market expectations for a 50 basis point rate cut in November dropped from 53% a week ago to around 5% after the latest employment report. After a weaker August report, the labor market rebounded with 143,000 private sector jobs in September, well above the expected 125,000. This unexpectedly strong rebound has led some economists to question the need for rate cuts. Capital Economics chief North American economist Paul Ashworth wrote that recent labor data throws into question whether the Fed should ease monetary policy. Ashworth believes that a 50 basis point cut is unlikely given the economy's labor market strength. ADP chief economist Nella Richardson agreed, stating that the employment market's strong performance in September casts doubt on past expectations of a severe downturn. Therefore, near-term Fed action is unlikely to contain rate hikes. Cuts as labor market resiliency falls. Why does the Fed ease monetary policy? Will it drop rates again before the year ends or return to its aggressive stance?